on Facebook. It'll take just a second here. And we should be live on Facebook. Hi everybody, welcome to today's video. I'm Sami Abasad, Director of Education at T3 Live. We're gonna do what we always do, is go over some swing watches for next week and then go over the market. So before we start, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. So make sure you agree to that before proceeding. Also, I'd like to invite you to download a free copy of my ebook, Unsexy Trend Analysis Secrets that Generate Beautiful Profits. Link is in the description. Again, link for that is in the description. But with that said, let's go ahead and turn on the charts and get started. How do we do that? I think we do it this way. How about that? If you find benefit in today's video, I'd really appreciate it if you hit the like button. That triggers the YouTube algorithm, which helps me out a lot. So as always, we start with the market. The market, you know, it depends on what you use for the market. I look at all four indices, the Qs, which represents the NASDAQ, SPY, which represents the S&P 500, IWM is the Russell 2000, and the DIA is the Dow Jones, basically, is the diamonds. Mostly I look at the Qs and the SPY. The Qs is had that big sell-off on last week. I think it was maybe Monday, the 13th. Yes, it was. And it was because of Tesla. I did say in the morning, I actually called Tesla short at 750. And I said the target was 500. I covered at 505. But it dropped. It ended up dropping below my target. It went to 1470. But I actually called Tesla short in the room at 1750. So that was an incredible drop. And the fact that Tesla was, that day at least, it might still be, but on that day or the day before, it was number 5 in the NASDAQ in terms of weighting, in terms of market cap. So I thought if Tesla tops out, it should bring the market down with it, which it did. It did. So now the market topped out on this day, but we haven't seen much follow through. And in fact, on the hourly chart, this is the hourly chart of the Qs, we're starting to, you know, this is the 20 period moving average, is starting to kind of point up. So it's starting to look like we want to go back up already. So that's what I'm seeing for next week, is that the market, it seems that the market wants to resume the uptrend. Perhaps we're going to slow down. We're not going to stay at the same rate of the uptrend is not going to probably stay at the same speed, the same rate. But every index that I'm looking at here is bullish. The SPY is bullish. It's basing at the highs for the year. Not for the year, but since we had that big drop. IWM looks higher. The diamonds, the DIA looks higher. It's above the moving averages. So, I don't know. I think it's going to depend on whether Tesla, which I have on the bearish list, but the truth is Tesla could go either way if you look at the hourly chart. Let me take out the annotation tool. It's very easy to see that Tesla, and where's my annotation tool? Just taking out my annotation. It's very easy to see that Tesla has got a base here, a pretty tight base. So over the base probably goes higher. Below the base probably goes lower. And whichever way Tesla goes, I think, so will the market. So will the Qs at least, okay? But as of right now, the market looks like it wants to go higher next week. So that's going to be my bias until proven otherwise. Slightly bullish until proven otherwise, okay? Not going to belabor the point. I think we talked about the market enough already. Okay, in terms of USO, I've had a call on it over 29.43. I think this should be 29.42, so over that long, but it hasn't triggered all week. I've had the call, has not triggered, so I do like it higher. GLD is at the highs, multi-year high, so that gold looks higher. GDX also, the gold miners look higher. So bullish across the board, pretty much, okay? So now on to the watches for Monday. If you're a subscriber to the Strategic Swing Trader newsletter, feel free to log on to your account and you will see which plays, which symbols I will be taking myself. We had an amazing week last week. We had two plays that reached incredible targets, but the biggest one, actually the second biggest play of the year for me, was HTBX. So that was called long at 91 cents, or at 91 I think. So over at 90 cents. Stop is at 81. So at 90 cents, stop at 80 cents. And I trailed out of it at 237, which was when it went climactic. In fact, I shorted it in my day trading account. That was on Thursday, right here. So trailed out of it. It looks like it wants to push higher still. HTBX. This was a 160% pop or return in a matter of just 1, 2, 3, 4 in 5 days. In 5 days, it went up from the entry was at 90 cents in 5 or 6 days maybe to well, I got out at 237. So again, just to 237, it was 160% return. The biggest play of the year was I have it on my desktop. It was CHK. It was CHK. It was this one right here. That was the biggest play out of just 1,000 shares, $13,000, 1,000 shares, netted $56,000 out of 13,000, 56 in a matter of 2 days, I believe, 410% gain. That was, I think, the biggest. So that's why I have it on my desktop. But the second biggest was HTBX. We also had the DVAX got to the $12 target. We've been in it from here, from like $6-7 right here, and it got to $12. So those were a couple of really nice plays that we closed out of last week. This week, for the upcoming week, I have some more plays that are similar, that look a little similar to both the DVAX and the HTBX. AIKI, the name of the game has been pharma or biotech stocks and low price stocks. That's been where the money has been, okay, for the most part. So I like this over the base. Now, the thing about this is it's not as good as the HTBX, say, because the stop is pretty big. So entry right here, stop is down here. That's a big stop. Target somewhere in this, 2 to 250, this area. On the AIKR, AKER, similar also. This is more of a 1, 2, 3. I wouldn't put the stop all the way down here. I would just put it under this bar's low or under the green bar's low, one or the other. Under the green bar's low would be safer. Under this bar's low would be a tighter stop, which means you can have more shares, which means higher reward to risk if the play ends up working out. Okay, AMPY is a weekly buy setup. So you see that weekly higher low. So I like it higher over a 146. This bar is high. Stop could be under 125, as tight as 125. You can always use the bottom of the base if you want a more secure stop, and target up here. Okay, so that's the AMPY. ASTC, a lot of small cap, no names, basically stocks that I've never traded before. Is just they're the ones that are breaking out. They're the ones that have been making the money lately. So breakout over the base, stop could be just under that doji bar's low, or under the topping tail bar's low. And then target would be around 550, I think, or $6. 550 I would shoot for on the ASTC. BTG is gold. Nothing special about it, but it does look higher. It's basing at the all-time high. So I like BTG higher. I don't know if I mentioned this or not, but if you would like to get the list of stocks that we're reviewing here, I also typed it up, copied and pasted it into the description of the video. So you don't have to type it up. It's in the description of the video, okay? CHFS, over that doji bar's high, over 61.50, let's say over 62 cents. Stop under 57. Target the prior high, okay? It's a daily buy setup. HTZ, now HTZ, I think, had its move, this big move, and I don't think it's going to have another big move. But could it have another pop, just one day or 2 day breakout? I think it can. and so I like it higher. The hourly basis isn't very tight, but I like the HTZ higher over the base on the hourly chart, and then I would expect it to get to 250 maybe. If it's gonna go, I'm not really sure about this one, because usually after the stock has had its huge move like this, which it did, it went from 78 cents, 80 cents to $6 in 3 days. So when the stock does this and then comes back down, it doesn't go back up. It rarely does. I mean, it takes a long time, and by that time the HTZ will have gone bankrupt. But I think it may have like a 2-bar rally in it, a 1 or a 2-bar rally. So that's why it's on the list for Monday. INFN is more like the DVAX. It's a monthly buy setup. Looks gorgeous on the monthly, but it doesn't look so good on the daily chart. So this is more of a long-term play, not a swing trade. If you're one of the traders that likes to turn their money over quickly every couple days, out of one play and into another play, then I wouldn't recommend doing the INFN. This is more of a long-term play. Again, it's very similar to this one, the DVAX. It's a buy setup, double bottom in this case, but this one is even better because it's above the moving average, and target on the entry is over 654. Okay, 654. Target is $12. Okay, on the INFN as a long-term play. The MYGN, I shorted it, and it dropped a little bit initially, right here, but then it just wouldn't go, so I covered it, and then on the sell setup here, it failed. So now it's starting to point up, and MYGN is genetics, that's biotech. So it looks higher over the base now. It's not my favorite idea. I won't be playing it. It's not one of the ones that I picked for the newsletter and for my own account, but it does look higher to about here. So that's a healthy move if it were to move up and reach the target. NBY is bullish, and it already popped on Thursday. Yesterday, Friday, had a narrow range bar, so over 160, stop at 139. So 161 by 139. On the NBY, I like it higher. OGEN is is exactly the same as the last one, the NBY. Exactly. This one, problem with it is it's closer to the resistance. So between the two, I would rather go with the NBY. Okay? Very similar setup, but I would rather go with the NBY myself. ONVO, nice transition. Notice that curling moving average. That's the 20-period moving average. I always like it when the moving average starts to curl up. Okay? Most of my plays are off of that curling moving average, off of that 20-period moving average. I mean, look at this. Wasn't that off the curling moving average? It's like when you're, holding a baby, right? So it's the baby holding the baby. So that's what it is. I like it. I like it when it starts to curl up, and right here, starting to curl up. It triggered already on Friday. I wasn't aware of it, but when I scanned this weekend, I came across it. So it already triggered, but it hasn't really gotten going, and I like it higher to 90 cents or so. Okay, on the ONVO. OPGN, another transition A breakout. Notice again, you look at most of my plays, they're going to be that curling moving average. And then so the entry for this would be over the base, the highest high, whatever it is, it's probably 229. Yep, 229. Stop is under the base. And then target is not that easy to figure out what the target is on this play, because there's a little bit of resistance at $3. I think a lot more resistance at 450 and at 550. So I would shoot for somewhere up there. Okay, around 450 maybe to 550 on the OPGN. OTLK is, that's a picture of strength, a lot of strength. This is a 1, 2, 3 setup. So breakout bar, narrow range resting bar, and if on Monday we take out the bar's high, that would be the trigger. So the entry would be over 166, stop would be under 152. Okay. TRVN, similar picture, except in this case it has a couple of doji bars, so it's the same exact setup. Right here, stop under, and then I don't remember where the target was for this one. I'd have to, okay, the target, well, we have resistance not too far above at $2. So that's kind of an issue. Let's look at the larger time frame and see where the target, this is also at the declining 20 on the weekly chart. Oof, this is a little more difficult than I thought because it's got resistance above at $2. If one were to play it, I would say I would shoot for 350 as the target, 350, but it's a little more complicated, a little more difficult than the OTLK, okay? Next on the list is USO. We talked about USO. I like it over 29.43 basically, or 29.50. WATT, this was a play on this day. Is that right? I don't remember which day. This day was a play, or yeah, no, it wasn't this day. It was this day. I'll show you. It was the 1, 2, 3. It went up 60%, and got to 350 was the target. It went above the target in one day. So this was a 1, 2, 3 breakout, narrow range bar. So entry over 238, stop under 211, and then it popped a huge amount to target. Now it's had a couple other pops since then, but now we have a pullback, a buy setup, and kind of a 1, 2, 3. So over 343, you can place the stop under 320. Better yet, in my opinion, is under 304. Okay, as a stop on the WATT. The target would be probably the prior high would be target 1, and then target 2, I'm not sure, would be up here at 4. Well, that's kind of the same. I would just shoot for 429 as the target, honestly. 429, okay? And then WISA popped on Friday. Most likely, I will wait for a 1, 2, 3 to set up before playing it because it already popped, but over the base basically, and I would shoot for $4 also on the WISA shorts. I only have 3. I just wanted to talk about the Tesla, that it could go in either direction, and I think it will have it will impact the market if it were to drop or go up. But Tesla is not necessarily bearish. It depends on whether the hourly base breaks out or breaks down. So Tesla is off the list for now. But I just wanted to be sure I talked about it. APTO is a 1, 2, 3. That looks lower. It triggered. I mean, it took out the bars low. We like when there's a 1, 2, 3. We like the igniting bar. We like the resting bar to be inside of the range, the bottom third or the upper third if you're playing it long, of the first bar's range. So like so. So this one already is below the first bar's range, but I still like it lower. APTO. Funny, the APTO and the CLNY, CLNY, they both were secondary offerings. I didn't trade the APTO. I did trade the CLNY and made okay money on it. Day traded it, that is. I like it lower under 182. Okay, stop would be over 195. And target is 240 something, 142, sorry. So I like it short under these 2 bars. Stop right here, and then target around 150, let's say. Okay, on the colony. And then the NXT, NXTC could go either way. If it takes out the base here, it could be a long also, but I'm not looking to play it long. I'm only interested in it as a short if it were to break down. Why am I not looking to play it long? Because this stock has been too weak. I mean, look at this. While the market is making new all-time highs, at least the NASDAQ has been, this thing has been selling off, so I wouldn't want to play it long. It's similar to Blue and some of the other ones that triggered on yesterday, like Blue. I think it is better in my opinion if you want something that's down a lot and has the possibility of moving up. I would go with something like Blue rather than the NXTC. So this is more of a short under 885. Stop would be in over 987 or so. Okay, and then no target because it's at all-time lows. All right. Well, that I think will do it for today. I hope you're doing well. This is going to be the start. I mean, we started earnings season already, but the coming weeks are going to be the busiest weeks of the quarter. This has been a pretty good month already, but earnings season thankfully makes everything better usually, because we get lots of companies reporting earnings, so a lot more volatility, a lot more gaps every day. And so this month is going to be one of the best, I think, for me this year. Let me just take a look. Okay. Yeah, so check it out. Here it is. So this is for the month so far. That's $64,000 for the month so far, okay? And we're just, today is the 18th, so we've had 2.5 weeks basically worth of trading this month. And that's without earnings season. So, and for the year, notice it's 534, or if I click on for the year. This is only since March, actually. 534,000. So it's been a really good year, but more so, it's been a really good month, and we haven't even gotten, the earnings season hasn't kicked off yet. The banks started reporting, but I don't like to trade the banks. So it's going to get pretty good really quickly. If you'd like to take advantage, you'd like to join me in the day trading room or in the newsletter, the swing trading newsletter. Both services usually do really well, especially well during earnings season. Link is in the description. You can get started for just $49 for the next 30 days, which is, again, the best time of the quarter. So if you'd like to join me, link is in the description. But with that said, thank you so much for sticking around till the end. If you found benefit in today's video, be sure to hit the like button. I'd appreciate it. And if you have any questions, reach out to our customer service team at info@t3live.com. info@t3live.com. Enjoy the rest of your weekend. I'm Sami Abasad of T3 Live. Good trading, everybody. Ciao.